Chris, thank you so much for making time. I'm really excited to talk about compliance. I think some people, when they hear the words customs and compliance, may want to fall asleep. But as I've gotten to know you over the years, this is actually a very fun-filled and I don't know if fun-filled, but it's a happening aspect of supply chain. So today I have Chris with Zeus Logics is the founder and CEO, and you guys operate a customs brokerage as well as doing a lot of work on customs compliance, specifically environmental and enforced labor. Is that right?
Mm-hmm. Yeah, we're a core technology company. So we started out in the customs space, got licensed as customs brokers, and we're using this to learn how to build software to facilitate the customs process. And much of our focus right now is on customs compliance, specifically really focusing on supply chain traceability for forced labor prevention and for making sure that the goods you import meet environmental regulations and import restrictions on that can be driven by deforestation, for example.
Cool. Yeah, I think this is not the episode for people who want like an overview of importing. But before we get deep, I do want to just kind of set the tone a little bit. So a lot of brands, when they think about customs, think only about HTS codes and incoterms. What are the nuances are people missing when it comes to imports and exports?
So you can view HTS codes as a way to classify things in a way that has impacts on your customs duties. The HTS code is basically a way for people across most UN countries to identify things to facilitate reporting. But customs goes much more beyond that. I guess the key thing that you would really want to think, what is the biggest issue in customs, stands around valuation of the goods. As the HTS code will define what tariff or duty or fees are applicable, but it's the valuation that can really drive the largest amount of impact on your bottom line.
That's great. And what about most favored nation status, denied party screenings? Like, what other aspects go into? Like, compliance could just mean, do you have the right HTS code? But I know you guys go much deeper than that.
So most favored nation status, denied party screening are all things that relate. Well, most favored nation status will trigger often what kind of duties are applicable. And they're often related back to free trade agreements. Denied party screening falls within the domain of admissibility. In other words, are you legally allowed to import something? So to give you an idea, some things are illegal for import into the US. For example, Makassar ebony. You cannot import Makassar ebony under any circumstance anymore into the US as it's been outright banned. Other things that impact admissibility, are you doing business with a party that has been banned? For example, who's been sanctioned, is on an anti-money laundering list, is on a terrorist watch list. We've actually come across that once. Very rare, but it does happen. So they are, call it fringe issues that you probably shouldn't be dealing with on a regular basis if you do your homework properly.
Makes sense. And how do regulations differ from market to market? I know you mentioned that HTS codes come from the UN, or UN member states kind of abide by them. Is it kind of all the same across the board, or are there nuances between Argentina and Armenia?
The devil is in the details. So systems like the HTS codes are maybe a somewhat good example. Even though the UN Customs Organization put this all together, everybody decided that they wanted slight deviations in things. And the deviations mean that what you would think would apply in one country, for example, a US interpretation of what a good is would generate one HTS code, but the interpretation in Argentina might be radically different. And that would in turn drive what the HTS code should be. Again, they're not totally uniform or standardized. Another issue that you have to deal with significantly when going across global markets is the methods of enforcement. In many countries, customs is fairly standardized these days, and there's good information about what the enforcement mechanisms are. In particular, as you start to deal with smaller, more emerging economies, that can vary greatly. And in some instances, You'll even have laws that are enacted for specific importers. For example, if a specific importer is importing something that a government does not want imported, there have been situations where laws have been drafted, which, although often illegal in most common law countries, is not necessarily the case across different parts of the world.
That's great. Yeah, I'm racking my brain back with some of the interesting nuances that I've had. I think the one that sticks out is when I was at Unilever, I was on the international team. That was the group that I led, and we had some deodorant that our R&D team was trying to work with, and they wanted to get to see how it reacted with different ethnicities' skin. And so I literally had the email come across my desk of, hey, we want to import some skin from a cadaver into the U.S. So that we can, do our lab testing on this and then get back to it. And, I'm sitting here like, okay, what's the HTS code for a body part? Like I couldn't really quite figure it out. And finally, we just said, hey, rather than doing that, why don't we just send the deodorant to Indonesia where it was going? And that's a much better idea. And so that's what we ended up doing. So there's all sorts of just fun nuances with that. I guess like diving into compliance in general, when someone says customs compliance, what does that entail or mean to you?
So when somebody speaks about customs compliance, to me, it means not only abiding by a country's national customs laws to get the goods entered, but also the record keeping and post-entry requirements that will guard against future penalties and enforcement actions. So it's one of the things that especially smaller importers will do is they'll assume that the process ends the minute they've gotten clearance for the goods. In the US, for example, you have to maintain records for 5 years. And if there's been a change in your understanding of what the goods are in terms of valuation, if there's been a change in the parties or the country of origin, subsequently updating those and eventually paying additional duties, or sometimes actually requesting a refund on duties. So it's not just the process of getting goods in, and a little bit like most tax liabilities, as customs is in part a tax collection function, you have to assume that it's an ongoing process with ongoing maintenance required to stay compliant.
It seems that most smaller brands just try to outsource that to their freight forwarder. Is that an accurate statement?
Well, you could view, if you think about what happens if you're a U.S. citizen and you have to file income taxes, you can go to H&R Block. You can use TurboTax to file your taxes. This does not mean that the responsibility for your tax filings transfers over to H&R Block and the tax preparer. You are still responsible for taking care of it. So when somebody tells you, don't worry, we'll take care of this for you, they might be trying to reassure you, but from a legal point of view, you are ultimately responsible for everything that agent of yours puts down in paper and for all their filings. Even if they make a mistake, you're still on the hook for their mistakes.
Yeah, that's a great analogy. And I think most people just vet out their freight forwarder or shop around based off of cost of moving the goods. But I can't think of too many brands that have vetted out their record keeping compliance capabilities. So that's definitely a question to add.
We've seen some really odd situations where a very large freight forwarder's customs department was on a friendly basis taking care of some record keeping back in the days, and they still had paper files for a lot of these things. And this particular importer ended up having an issue, and customs wanted to do a deep dive on their prior 5 years of activity, and they couldn't produce the documents. In the end, they had a fairly large fine, big disruption, and in this case, one of the documents, literally there was a box, a banker's box, that had mice nest inside it, and the mice had, of course, eaten away at the documents. So the dog or the mouse ate my homework excuse really does not work here. Document retention is a big deal.
Yeah. All right. So make sure you put bait inside your banker's boxes, or just keep it online.
Yeah, do it electronically.
Yeah. What are the most common compliance risks that you see, with international supply chains?
So if you think back, again, it's somewhat similar as a good analogy with your personal taxes or your corporate taxes. Underpayment of duties is the biggest risk. And underpayment of duties usually occurs because of an incorrect classification. So for example, putting in the wrong HS code or not. This is probably more rare, but not attributing the correct duty amounts payable, or an incorrect valuation. So these are maybe a little bit more obscure, but if you, for example, are making garments, did you receive an assist from a manufacturer that is not appearing in your cost of goods sold, or rather in your cost on your commercial invoice when you're importing things? Those kinds of things can come back to bite you, because the customs authorities will come back and look at this and immediately determine that there's monies that are owed, which can be a big drain on cash, and they'll often assess penalties. So that's the most common risk.
How do they get tipped off to something like that? I imagine that they're probably only looking at this for really big shippers. And I don't know if they're going after the onesies or twosies, but how do they get tipped off on this?
So if you think about a tax collection function, is ultimately a bunch of numbers. Numbers tend to exist within certain ranges for a given good. Some of this, and customs, sort of like the tax authorities, they don't tell us exactly what methods they use to identify suspicious imports. But chances are that if you're importing something that most people pay $5 a unit for, and you claim you're getting it for $1.50 a unit, that's going to trigger some kind of inspection. It'll be an out of range type of data. There is also a certain degree of random inspections that are done, the same way that happens with dealing with your tax authorities. For your personal income tax, a certain number of people get audited. So customs will come in and do random audits, and then there's also just statistical analysis of what's going on.
Got it. So it kind of sounds like they're looking at the history. So if I've got something where I'm declaring the value at $1,000 a unit, and then suddenly I declare it at $200 a unit, and then go back to 1,000, that's probably going to set off some red flags and zero in. So they're kind of looking for anomalies that way. And then I imagine that when it comes to just those random samplings, they're kind of saying, okay, I've got 500,000 shipments. If I'm a shipper that has 10,000 shipments, I have a higher likelihood of being audited versus one that has one shipment. Am I kind of close there?
So broadly speaking, yes. I mean, we could get into the details, but then we might all fall asleep. There are, as a general rule, bigger companies are more exposed, but there is, again, a degree of enforcement on small companies. The other thing to pay attention to is if you're Unilever and you get hit with a $500,000 fine, it's going to be an annoyance, but you'll probably be able to weather the storm, and you'll be able to absorb it financially. If you're a smaller company and you get hit with a $100,000 fine, depending on the size of your company, that might be a life or death matter for you. So even though your risk expands the more shipments you do, the danger of the penalties also tends to increase the smaller the company is. The other thing is that when you're a large company, you tend to have processes in place. You tend to have a layer of management that will come in and make sure that there's an actual compliance policy. And this tends to weed out a lot of the problems. Very often, small importers who aren't familiar with the needs for customs compliance or what best practices are will come in and they'll act in good faith, and they'll think they've done everything that's required, not understanding what some of the pitfalls are.
Yeah, one of the things that is kind of coming to my mind as you're saying this is, occasionally I'm sure you've seen it too, but we'll run into a company that is getting cute with what they're calling certain things from an HTS perspective, and therefore from a tariff point of view. We typically turn those guys away. But I imagine that if they're looking to be acquired, that acquirer is going to be opened up to that liability potentially.
Mm-hmm.
And I think you said you got to do record keeping for 5 years. So I imagine it's previous 5 years. I don't know if it goes further than that. But I think this is something that companies that are looking to exit maybe aren't thinking about necessarily, because if there is a $500,000 penalty that comes across, and let's suppose that it's Procter & Gamble who acquired you and they pay for it, that is going to come out of the deal consideration that you had. And so that founder's going to have to fork over some portion of that money depending on the equity that you had.
Yeah, that's a great point. In particular, this has become in particular true since a lot of importers are bringing in things from China. And the Section 301 or the so-called China tariffs have often increased the amounts of tariffs due by 15 or 20 times. So that this has now started popping up on acquirers' radars. And if you're dealing with like a very, very big acquirer, I'm assuming it sounds like you may have been through this before. You know that the due diligence requests and the reps and warranties that you have to make about the state of your business are really, really extensive. Even if they don't catch things in their due diligence process, if something comes back to bite them and you made a rep and warranty that your customs was properly handled, and it ends up that you may be personally liable as a seller later on down the line. So this is the kind of thing where the geopolitical situation has all of a sudden made this a much bigger deal for much smaller companies.
Yeah. And what kind of advice do you give to companies? Because I think on one end of the spectrum, you've got this inherent desire to be cost competitive, to be somewhat aggressive in your HTS codes. And if it's a toss up between two and one's a 15% tariff and one's a 2% tariff, you're going to do what you can to qualify for that 2% tariff. And so there's an element there of like being aggressive in the sense of making sure that you're optimizing your tax structure. Obviously, if you're importing, TVs and you're calling it recycling, like that's just fraud and that's not going to fly. But when you're, talking with a brand or you're trying to give them that insight, how do you help them navigate the right level of aggressiveness to have in their HTS classification?
A lot of this boils down to due diligence. So let's set aside like the outright fraud thing, realizing that there are 65,000 people over at customs. They wear those uniforms and they'll show up with guns at your office and eventually take you away, I believe with the help of the FBI usually. But let's put them aside and try and deal with the edge cases where people who are acting in good faith or trying to optimize things can incrementally get themselves into trouble. One situation we see is people not doing their due diligence on their landed costs. So somebody will come and they'll take a look and they'll say, I just got an offer to purchase this bicycle rack for $100 from China, and then I went and tried to get it priced out in Mexico, and in Mexico they wanted $115. So they go ahead and they order it from China without having priced the import impact, the impact of import duties and fees. And these days, you'd also really want to add in the logistics and supply chain expenses that are going to come in. And then they come back and they realize that their product costs much more than they thought because they'd failed to properly understand what the import duties and fees would be. So the one way to do this, if you really want to make sure that you're optimizing things, is to look at every single product, understand its origin, what tariffs may impact it, and get somebody to do essentially an HTS codification exercise or classification exercise, and also understand what the tariffs are at the time that you sign the contract, so that you don't have any surprises going forward. There's another way that we see some people get into trouble, and that is they're relying on free trade agreements, and then they'll change their sourcing. So let's say, for example, that you were manufacturing something in the Dominican Republic, and last year, 65% of the product of your good was made in the Dominican Republic, and then you change a supplier. All of a sudden, the Dominican Republic content drops from 65 down to 20%. You may find out that all of a sudden you no longer qualify for that free trade agreement, but the sourcing decision may have been made in a very, very different department than the compliance and logistics decisions. So people can also get into a little bit of trouble that way. And you really want to pay attention to the customs implications when you deal with your sourcing and monitor that as you update them.
That's a great example. And I think, silos in supply chain are a real thing.
Yeah.
Do you have a particular example or case where like non-compliance had a significant impact on a business?
Oh, that example I just gave you about the manufacturer in the Dominican Republic is a significant one. That generated tens of millions of dollars in liabilities to a company that had about $1 billion in revenue, which means that it ate a lot of their profit margin for that year. There's a new aspect to customs as well, and this is particularly true when importing things from Southeast Asia, but it applies globally. Currently, there are requirements. You may have heard of the Uyghur Forced Labor Prevention Act, which is a law that took effect in 2021, which now means you have to document the sources of certain commodities that come in. And those actually don't even really involve non-compliance. Those just involve a new level of compliance. But we've seen a lot going on with non-compliance with forced labor laws and inadmissibility of goods into the U.S. Most large example we've ever seen was a company that had 500 containers of construction materials held for over 120 days. They subsequently had to re-export them and retained a couple of containers in the U.S. to try and get them through. That was tens of millions of dollars in losses for that company.
Yeah, those are the black swan events that make it into the prospectus or the SEC filing.
Yeah,
Um,
so there are some other things that happen more frequently. Um, Often having to repay duties back going 5 years is a little bit more common. And this again has to do with not having done the due diligence initially, having gotten bad advice on how to classify items, or simply there being a change in how things were sourced.
yeah, that makes sense. Shifting over to e-commerce a little bit more, what are some unique compliances that e-commerce businesses are facing?
You know, the beauty of e-commerce is that you could get items on demand fairly quickly, and that you could sort of reduce the time it took you to get something and have it imported in quickly, or be able to receive it. Call it like click to delivery. If your goods start getting held up in customs, and customs identifies you as a problem importer, um, and if you promise your client they're going to get something in 3 weeks, and you're counting on your imports coming in the next week to be able to get that to them on time, and instead it gets delayed because your goods get held up in customs, or because customs decides to start inspecting every single one of your containers because they've noticed a few discrepancies. This can be the kind of thing that we've seen really impact an e-commerce business's ability to deliver on customer expectations and breaking that customer promise.
Yeah, I mean, so much of the conversation is just getting around with the de minimis and dropping things that way. And I imagine that's how companies like Temu and Shein are part of the reason why they're so cost competitive. The other part is, amazing what you can charge if you're okay losing billions of dollars a year. Um, but is there anything specific that, whether it's a large company like Temu or just your run-of-the-mill DC company that's importing from or drop shipping from Asia, that they need to think about as it pertains to customs compliance?
So I think you said a magic word there that qualifies the entire rest of this answer, and that is de minimis. There is this concept within the customs world of a shipment that is so small that essentially it doesn't go through a formal customs clearance process. And this stems from the days when everything was done via paper. There was no concept of e-commerce, and you had some people who would send, maybe they'd send a small commercial sample via the mail, or some small package would be sent for friends sending each other gifts or something like that. And the cost of processing everything with using the paper documents was fairly high. Today, with all the reporting being done into customs electronically, and almost every single e-commerce transaction having financial numbers being taken into account and being stored electronically, customs has decided that they're going to progressively get rid of the de minimis exemption. We don't yet have a full timeline for that, but the EU said that they were getting rid of VAT exemptions about 3-4 years ago, and they're starting to layer that in over the next couple of years.
So, in other words, no matter how small, if you're importing a package in the U.S., you're going to have to file, something with ACE.
Yeah, and it's going to be done to some degree automatically. Right now, the de minimis exemption is $800 per day per importer. So if you're an individual, you could import $800 of stuff 365 times a year. I don't know if they'll accept that on certain holidays, but you could import a lot of stuff individually under your name. If you try and import something that is $1,000, it then has to go through a more formalized process.
One thing that's just interesting is the de minimis. That the $800 is the American one. I know Canada is like 20 Canadian dollars, which is like 12 US. And so everything gets declared there, and which is it's one of the things I find when there are U.S. companies that say, "Oh, we're going to ship to Canada. It's the 51st state. Well, she'll be fine," and they get surprised when they're either getting a customs bill or their parcels are being held up, and the customer's receiving basically a flyer in the mail saying, "Hey, you owe us
Yeah.
some more tax. Come pick it up at the post office." Um, and so it's interesting that the U.S. is moving toward getting rid of the de minimis as well.
Canada often adopts things a little bit more quickly than the US has. But this is a general trend, right? Now that all documents are electronic and most things can be calculated electronically, the burden of actually processing a customs document has gone down. The other thing is part of customs policy is trade policy for a country, right? Customs regs sort of reflect what the legislature in the US or various authorities deem are the commercial interests of the country. And a lot of e-commerce is getting goods into the country in ways that most of the politicians would rather see manufactured domestically. Now, Shine or Temu are not going to have a lot of friends in Congress offering to help them continue to import things at very, very low costs. It's just not a super high priority for them. The other thing that happens with the de minimis goods is because you don't have to file a declaration about the origin of goods that's very clear, and because you don't have to make the certifications, things like forced labor weigh less on a $3 shipment of socks than they do on a $300,000 shipment of socks. You're getting a lot less scrutiny associated with a whole bunch of new rules that are coming into effect over the past couple of years, with increasing severity over the next 3 or 4 years.
Gotcha. So kind of two questions that prompts is one, if you had to wager a guess, any of these large drop shipping companies that are importing cheap things in the U.S., if you were to look into their supply chains, what's the likelihood that you would find something that wouldn't pass muster if they were importing traditionally? We'll start there.
Let's think about people importing large quantities of garments from very, very small batches of suppliers. And let's think about how getting very, very small factories that produce things in small lots that very often will not have their own compliance processes in place at that factory level are going to have a great degree of difficulty reporting back on the admissibility of goods. Think about certifications for fire on a child's garment. When you think about a sort of an aggregator of a lot of dropship products, the importer of record on that is probably going to be Temu or Shine or whichever large, call it dropshipper, is going to be doing this. And I can only imagine that there will be a massive liability to these companies as the de minimis exemption gets removed and as the ability of customs to do more inspections on a small level it's held up. And although I'm not privy to whether these big drop shippers are importing under their own name, the approach customs has basically taken is if you buy something, you have some degree of responsibility for what comes into the country. So even if these drop shippers are getting other people to be the importer of record when they import things, that doesn't mean that they will be immune from liability if customs decides to start seizing things. And they may just start looking and saying, okay, insofar as you are, as the buyer or seller, is one of these large drop shippers, that might just be enough to trigger an inspection. If they don't properly address it, I would say this will be an existential risk for those businesses. And it would be really, really interesting if they were publicly traded to try and understand how you could potentially short their stocks as the de minimis rule expires.
Yeah, that's really interesting. So you're kind of, just to sum up what I heard, it sounds like just by understanding that these smaller lot sizes are going to come from smaller factories that don't have necessarily the managerial overhead to make sure that they are compliant. So some of these guys may be outright compliant on purpose, and others may just not know that they need to be compliant because they're, a 10-person factory.
Yeah.
Your thought is that as you start pulling back the curtain, you're going to find a lot of stuff that that was not intended to be there, or was hoped to have not have been found.
Yeah, and this even even if this drop shipper is doing the best job they can possibly do, there's going to be enough variability that it could potentially debilitate that importer. If they are importing under their own name and customs discovers that there are substantial recurring violations, they'll just shut down their ability to import, and that's that. And that can take that can kill a business, an import-driven business right there. If customs determines that shipments that go to a distribution center that are associated with a certain importer and have a large number of errors or call it compliance violations are coming up, that could be enough to get those flagged and additionally inspected. In a business that counts on high throughput, very low margins, and things operating smoothly, this is, I think, going to be a game changer for them. And I have difficulty imagining a scenario where you will easily be able to have compliance with those types of suppliers and the volume of business they're doing into an economy like the US or most EU countries.
Yeah. It seems that this rollback of de minimis as a concept is going to have pretty massive structural changes to cross-border e-commerce just in general. Given your understanding of how customs usually announces things and then rolls them out, how quickly do you think this will happen, and when do you think this will start to happen, and how do you think it's going to come about?
So, as you mentioned earlier, countries like Canada have quite limited de minimis shipments, and those have been progressively reduced over the past few years. So, as de minimis exemptions start to vary, people will need to understand that they're expiring, because just because you ship something, if you're shipping something from China and it takes a month to arrive in the US because it was on the ocean for a month, or maybe something got held because of weather, you have to plan for what the regulations are when the good will clear customs, not for when you ship them, and not from when you ordered them. So doing that kind of scenario planning is really, really key. Another place that we're going to see a lot of variability is in the understanding of not only which regulations apply, but what duty rates might apply as those shipments kick in. As if you imagine an organization that's been doing drop shipping of large and expensively bought items, they've never had to have a customs compliance department in place to assess what those duties and fees are. So just doing that transition from somebody who relied on a de minimis exemption to no longer being able to benefit from that is a huge organizational change. And if they haven't started thinking about it already, it's going to be a huge issue for them.
Yeah, when customs makes this change, is it something where they're going to announce it in January and implement it, 4 years from now, or is it something that you're just going to see the Google alert that says, "Hey, de minimis is no longer a thing. You got to be compliant within 30 days."
So they will typically give you at least a year's notice, but there are customs and practices of, there's like habits and practices of what people do. In theory, I don't believe that there's anything to stop them from making an announcement, keeping it very under the radar, and then finding people who are not compliant. As a practical matter, customs doesn't want to completely gum up the flow of commerce. Their job is to keep things moving in an orderly manner. They have an incentive to continue to collect revenue, and you can't collect revenue if things aren't being imported. And they also don't want to appear, they don't want to be so disruptive in their enforcement that it stops the flow of commerce. People get to be unhappy when they don't get their sweater on time. People don't like surprises. Surprises are bad for supply chains. They're bad for profit margins. They're bad for customer satisfaction. My bet is that you will see at least 1 year's notice, and that enforcement may be phased in. It probably depends on the type of enforcement and the efforts that people in a given industry are making to be compliant with things, but that there may be phased in enforcement.
Gotcha. Yeah, I think I read somewhere that it was like $60 or $70 billion a year that customs is not collecting because of the de minimis loophole and the threshold being as high as it is.
Yeah.
So,
Nobody ever planned on like super cheap e-commerce. The practice of labeling things with UPS labels overseas having them, identified as belonging to an individual, rather than bringing things in bulk and then mailing them out from a US-based warehouse is something they really hadn't counted on. It's a lot of money, and $65 billion will definitely mandate a lot of change.
That's true. Yeah, you could say, think of all the schools that we could build, or think of all the weapons we could build. It's just like the U.S. government's going to spend it on what they're going to do.
Yeah.
I guess what understanding that this is likely to happen at some point in the future, what strategies do companies need to be thinking about to minimize the financial risk associated with being non-compliant, whether it is something that they intentionally were doing or unintentionally were doing?
So the key to all this is planning, and is understanding before you enter into a market. For example, we have one client who make a direct-to-consumer home product, and they came to us and they had 17 new markets they wanted to expand into. Right now, they're importing from China into the U.S., and they had a few one-offs into other countries. And they had an experienced supply chain director there who came to us and said, can you do a study? Can you help us track down what are the requirements for labeling? What are the requirements for duties? What are the requirements for testing for this item moving into different markets? And dealing with 17 countries, a lot of them were in the EU, but they had substantial demand into places like Egypt. They had substantial demand into the UAE. They had substantial demand into Switzerland, which has a lot of different labeling requirements. And so you have to figure out what the regulations are to the goods that you're importing. That's the first thing, is understand the different markets you're dealing with. Then deal with reputable customs brokers, and if need be, consult specialized attorneys who understand what the rules are and will advise you on what the requirements are for given goods, what the pitfalls are when importing. The attorneys have a wealth of knowledge, and attorneys have seen almost and are familiar with almost every single edge case and how that might apply to the goods that you're importing. And then the other thing, and what drove us to build software systems, is have good systems in place. Today, there are a number of systems out there that are even available to smaller companies to go and keep track of this whole process, so that you can, rather than having on staff a customs expert, you can have a lot of your compliance process driven by software that line level operators can deal with.
It's helpful. All that being said, things are changing pretty quickly, it sounds like. I live and breathe this space, and I had no idea they were phasing out de minimis until 15 minutes ago when we talked about it. What do you do, or what should other companies be doing to stay up to date with changes in regulations?
So the key thing is, if you have a good customs broker and there are substantial laws that are changing that impact the kind of goods you import, they will let you know. They will let you know what's going on. If you are a company that's large enough to have a relationship with a global trade attorney, they will also keep you updated on the commodities that are impacted and how rules are changing. If you think about, in the same way that if you have complex taxes, you're going to require more complex supervision of your personal income tax filing process. As your business, and this is in part just driven by the fact that just as the tax code is difficult for the average human to understand, customs code and the, call it rather, somewhat esoteric and specialized laws that govern the customs world are really something that fall within the domain of experts. And it's one of those, it's a cost that your business should have in, and it should be indexed to the amount of reliance that you have on imports. But yeah, I would say that a good customs broker who agree that they will send you with a regular process of updating their clients on the goods that they import, and an attorney or consultant specialized in the space can make sure that you stay on top of regulations and that you correctly interpret them. Because just getting an email, I know sometimes when I receive emails from customs, I often have to go back and check with somebody who's an expert in interpreting them, as they're just esoteric codes of law.
Yeah. Are there specific product categories that uh, that prone to have more frequent changes? I'm thinking like agricultural comes to mind. I can think about some instances where uh, quotas change and what you can import, what you can't import. Do you have the right license? And so I'm wondering, like, if you had to kind of think about, hey, if you're importing paper towels, you're probably okay because that's not really going to change a whole lot. But if you're doing something that is in X category, you're probably going to see more changes. So it makes sense for you to incur that cost of having that expert in your corner sooner rather than later.
So some things, agricultural products, tend to be very surveilled. They tend to be watched a lot. Um, a lot of this revolves around geopolitics. If you have goods that are contested, or if the nation into which you're importing happens to have a strategic manufacturing base in a given product, and there have been geopolitical shifts. This could be a war, it could be new trade treaties, it could be the change of an administration, governmental administration in the country you're importing into. Those are situations where you'll see more rapid change in goods. As to specific goods where you'll see changes, quotas tend to vary. They tend to be set when people negotiate free trade agreements. So I would say that rather than thinking about specific goods, pay attention to the geopolitics that are impacting the goods you're importing. Right now, there's a lot of scrutiny being paid to palm oil because of the risk of forced labor in palm oil supply chains and deforestation in palm oil supply chains. As rules start to be brought in that impact deforestation in Europe, assume that there will be a lot of changes coming into importing anything that contains palm oil into the EU. And palm oil is one of those shockingly prominent ingredients. It seems like it's in everything.
Yeah. One of the things I love about supply chain is it is that cross section between geopolitics and the physical world, or the real world, so to speak. What impact do international sanctions, embargoes, how do those things impact, I guess, customs, as well as how brands think about supplier selection?
We've been hearing for a couple of years now about nearshoring, about people wanting to decouple the US and now other economies from China. There's a lot of impact in sourcing decisions. As you may have heard with the war in Ukraine, embargoes were all of a sudden brought up on importing certain kinds of goods from Russia. These can occur almost overnight. And it could happen very, very quickly. Embargoes and sanctions affect the admissibility of a good. If your good is deemed inadmissible and customs come across it, unfortunately, there's probably very little you can do. If the good's already on the water and it's going to arrive in the US, and all of a sudden that good has been from a nation that's been embargoed, your best hope is to try and re-export it before it gets admitted into the US. Sanctions often are delineated by sanctioned individuals. If the individual you're dealing with becomes sanctioned, it can be a little bit tricky. People aren't always paying attention to that. But if the company you're dealing with becomes sanctioned, hopefully you will receive notice of that sanction before you purchase things. But if you got something in a container and the company gets sanctioned while it's on the water, you're a little bit out of luck. There's not too much you can do to mitigate those in the short term. If you regularly import something from a country that you believe may be about to undergo sanctions or further duties, looking towards alternate suppliers and understanding what the costs are for those alternate suppliers so that you can quickly shift is a pretty good strategy.
That's helpful. Man, I feel like we've got a ton of other stuff we can go through, but we're coming up on time. What are some just parting words of wisdom you would have, either about the importance of compliance, or some ideas of, if you did these two things, it would eliminate 80% of your problems that most people aren't doing? Just kind of leave us with your last thoughts there.
For a lot of small businesses, understanding that this is an issue is one of the most important things. I don't know anybody who, when they were 8 years old, said, I want to be a customs compliance expert when I grow up. This is something that's not terribly intuitive for a lot of businesses to think about. So if you're a small business, a small importer, a small e-commerce company, and this is on your radar screen, you're already starting out 1 foot ahead in the race. The other thing is, if you understand this as part of a process rather than a single event, right? Is the process? It starts when you deal with your sourcing. Then it starts when you deal with your pricing and understanding what the real landed cost of goods is. And then it's not only the customs entry that your forwarder is doing; it's also dealing with the document retention and making sure that if for some reason you discover that a good something has changed in a good and that you might need to refile your customs entries, that those are handled. If you're aware of this being a process rather than an event, that's a great thing. If you're aware of these issues at all, that puts you ahead of a lot of people.
Yeah, knowing what it is half the battle, I guess.
Now we saw one importer very early on. They were importing herbal foot pads from China that were then turning around and being sold into Chinese medicine shops in the U.S. And the company in China that made them made medical claims, for example, on them. The medical claims are directly translated from the Chinese label into the label for import into the U.S. And the importer had no idea that they were not allowed to import things that made medical claims because they were fairly new into dealing with this. It was a new product line for this particular importer who was going to turn around and resell them on Amazon. If you can get beyond that so that you understand your products and you can identify the issues, you're miles ahead.
Yeah, I guess then the question is, what do you do with all these these leftover products that you couldn't import?
In those guys' case, unfortunately, all they could do, the relabeling was going to be too expensive, so they re-exported them. But not paying attention to that, not having knowledge of that, it made that a big loser for that particular client. It's always a shame to see people who come in and they're excited about a product, they found clients who like it, they found a good source, and then a little mistake like that ends up taking it from a great scenario into a money loser.
Yeah, I hear you. Well, Chris, this has been great. If people want to get in touch with you, what's the best way to do that?
Email me at cw@zeuslogics.com.
Sounds good. Thank you so much.
Thanks, Aaron.